Back Batu, pray for Latu, Batu. Hey guys, how are you? Tutor Investments from Quality Mindset. So today we'll be finishing up the income statement we'll be doing. As you remember, is the financial accounting N4 2024 November 6 paper. So we'll be doing the expenses part right now. So we ended up on gross income for the year, and now we'll be doing operational expenses or other expenses. You can just say other expenses. Other expenses. Yes. So other expenses. What do we mean when we say other expenses? So we'll be talking about other expenses. So yeah, let's just finish up real quick and finish the income statement. It shouldn't be that hard, should it? Okay, so we'll be looking at adjustments. So let's start with consumable stores. We have inventory on hand 780 consumable stores. Consumable stores. Consumable stores. So we have 780,000 rand, or no, 1,780 rand of consumable stores. So what's our consumable stores here? 5460. So the way consumable stores works is that we spend 560 on consumable stores, but the 780 left. So meaning it's an income. So for example, if you put down a budget of 6,000 for the month, let's say for the month of April, you are budgeting that you're going to spend 6,000 and you spend 5,000, that's cash on hand, right? So it's similar to consumable stores on hand. It means you have a surplus of 1,000 rand. So it comes back. It's no longer an expense. It's an income. So since you don't record it as income because you're gonna use the money next month, and the consumable store is gonna work next month. I don't know if you understand me, guys. So yeah. So it's how the consumable stores work. It's 5460 lessons 780. So we're left with 4680. Okay, so we're moving to what? Let's check for another transaction. Trust and fixed deposit, rent, debtor, insolvent, was written off 3,000 bad debts. Nice. Debts, bad debts. I'm sorry about that. Sorry there, guys. I tried Red Bull and now it's kicking in and very much and on a high volume. Okay, so we have credit losses, which is 9,850. Credit losses 9,850. We add. We add the remaining the one that ran away. So meaning it increases our consumables, our credit losses. Then we go and continue to more transactions. So we did this one: depreciation, vehicle, insurance, loan. Okay. So let's start with depreciation. I don't know why my laptop keeps doing this. So depreciation. depreciation. So we're starting with what? Equipment. Oh, we have 15% on cost price for vehicle. We have a a vehicle gross varying value of 435,000 was bought on January 2021, and the cost price. Okay, perfect. Perfect. We're starting with equipment. Okay, so let's start with equipment. 180, 96,000. So 480. So diminishing method. So we'll be using the 480 accumulated equipment. So equipment is 480,000 lessing 96,000, which is equals to no 96,000. You open a bracket. Open a bracket, close the bracket, then you open a bracket for this. So this, it will give you the amount that's left for that, then you multiply by 20%. This should give you the amount for equipment. It should give you the amount for equipment. So we have our equipment price, which is 480,000, accumulated depreciation, which is 96,000, and the depreciating rate, which is 20%, and this gives you the depreciation for the year, guys. So anyways, we continue to vehicle, starting with the old vehicle. Let me say old vehicle. So as you can see here, we have a vehicle grossing value of 135,000, was born on 1 January 2021. Our year ends on June 2021. So the meaning this vehicle was recorded in here, in this vehicle. So is it 992.50? So we have to take out the new vehicle, so we can calculate depreciation for the old vehicle, which is 920, 500 lessing 135,000, right? Which is cost to gives you the old vehicle. This was the amount of the vehicle on December. This is the amount of the vehicle on December, guys. So don't get confused if you see this amount, guys. Wherever you see it, when it says old, that's what you do. Then you multiply it by 15% because it's on carrying value. Then it gives you the depreciation for old vehicle, which is 117,825. This is the old vehicle. Then you calculate the new vehicle. So since the new vehicle hasn't finished the year, you have to calculate the full amount. So it's 135,000 multiplied by 15%. 15%. So this will give you an amount. Then you multiply by 6 months, because it's January, February, March, April, May, June. It has, sorry about that, it has only been in our possession for 6 months, because we bought it on January 2021 and our year ends on June 2021. So yeah, you have to do it like that. Then it gives you the amount for our old vehicle, our new vehicle. So we have 3 depreciations for equipment: vehicle old, vehicle new. So you go into your income statement and say depreciation. old equipment 76,800. Sorry about that. And then new old VIK 117,825. And then new vehicle 10,25. So, oh, sorry, I didn't calculate the amount for credit losses. 13,750. Then the amount for for depreciation 204,750. It's 204,750. So now we continue to our transactions. We have insurance has been paid up to April 2021. So this is a deficit on our, this is a shortfall on our insurance. So how much is our insurance? 11,300. So we've only been paid. Okay, so insurance, let me calculate it for you. Insurance, we've been paid up to 10 months. We have paid up to 10 months. So we have to calculate 12, right? So it's 11,300 divided by, divided by 10. So it'll give you how much we pay per month, right? Give you how much we pay per month, which is 130, right? This is how much we pay per month. So since you have to pay for 12 months, you multiply 130 multiply by 2 gives you what's the amount? 2260. This is the amount for insurance. Then you come here, since there's a shortfall, we didn't pay for advance insurance, 11,300. Adding down expenses, this should give you the remaining amount, right? Should give you the remaining amount, which is also 13,500. So we still continue to say the interest on loan is still due. The payment was made. The payment of 6,000 was made on September 2020. No, so we shortfall on our loan first. We shortfall on our loan first. Oh, it's a payment of 60,000. So, anyways, let's just do it fast. It was paid on September 2020. So our financial year starts on 2020 July, 1st of July 2020, and ends on June 2021. So a payment was made. So meaning it was July, August, September for 3 months. So this payment was made when? Was it the 30th? It's important to check the date if it's the 30th or the 1st. Because if it's the 1st, the month doesn't count. So this was made on the 30th. So it's July, August, September. So the loan was 3%, was 30%. Okay. The loan was 30%. The loan was for 3 months, not 30%. And the loan was 18% for 240,000. So since this is the pre-adjustment trial balance, this amount is for the end of the year. So if interest on loan, let's calculate our last interest on loan, right? 240,000 multiplied by 9 months. Guys, remember the loan was paid. So from October, November, December, January, February, March, April, May, June. That was the 9 months this amount is based on. So it'll give us a calculation at uh, at 18%, right? 18%. Then it'll give you, give me a second. 32,000. What happened? 32,400. This is the loan repayment for the second term of the loan. Then we head to the first term. This second term of the loan is 240,000 plus 60,000 of the loan repayment, right? Multiply by 18. Sorry, multiply by 18%. Let me do this. 18%, which equals to second 54,000 multiply by 3, the remaining months of the first payment, divided by 12, which is 13,500. Which is 13,500. So this is your loan repayment, guys. So interest on loan is going to be interest on loan is going to be 13,500 plus 32,100. Sorry. So we should give you the final amount of 45,900. So yeah, guys, this is the transaction part of our income statement. So we'll just be taking whatever's left. Courage and sales, we did there. Courage and sales, there's what? Salaries, there's your water and electricity. Yeah, so we just transfer. Our first transfer is courage and sales, which is 18,400. Salaries, we have what again? Credit losses, consumable stores done, salaries, which is 192,500. Is it 400 or 500? It's 500. Water and electricity, 36,800. 6,800. What's next? Import duties done, water done, done, and we done. So we have net profit for the year. It's done and done and done and done and done and done. So we done. So anyways, final answer is gonna be open bracket. Ooh, 4, 3, 5, 6, and 5. Wrong, wrong. The final answer has to be this plus this plus this 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 plus this, which is equals to a minute. I think my okay, counting. Okay. Oh, okay. I have to calculate by hand. So give me a second, guys. My Excel doesn't want to work for me. Excel doesn't want to do the work. Yeah. Anyways, so it's 4,680 plus 13,750 plus 204,750 plus 13,500 4,500 is 18,400 plus 192,500 plus 368. It's 53 53 53 0 2 80 80. We shall be in bracket. We shall put it in bracket, and it shall be part of the bracketeers for the rest. Okay, I'm sorry, guys. I'm sorry. Then you less gross income, lessing other expenses, which is 280, lessing 435, which is 94,000 in bracket because it's an expense and this company is losing money. 94,605. And this is how you do your income statement. And we just finished the expense side of the income statement, guys. Please tune in for more videos. The next video shall be about notes to the balance sheet, like we said earlier. So yeah, tune into this, guys. Yeah, there'll be more about there's also financial accounting in 5, financial accounting in 6. There'll be more about cost and accounting management, computerized financial systems. Guys, tune in, check out the channel. It's a brand new channel, so please like, subscribe, and comment. Tell me what you think, and thank you. for watching.